Later today, we will be hearing from the Federal Reserve about its closely and globally watched decision on interest rates. The Fed is concluding its two-day meeting, and economists do expect rates will remain steady. Of course, the president has been pressuring Federal Reserve Chairman Jerome Powell to lower those rates, which Powell has said isn't necessary right now. NewsNation's Alicia Nieves is live on Wall Street. And Alicia, are we expecting to see interest rate cuts anytime soon?
Yeah, Markie, that's the important question, right? Because interest rates, they really affect everything from, your mortgage rates to your credit card debt to how willing employers are to hire. Let me answer it this way. Historically, at least one of two things need to happen for the Fed to really be comfortable with starting to cut interest rates. For one, we need to see unemployment tick up and be concerning. And then two, inflation has to be under control. The latter part, something that this particular Fed Chair Powell has been really focused on. Let's look at the numbers and see where they're at right now. In terms of unemployment rate, that is right around 4.1%, when the benchmark goal for that is 4%. So we're almost on the nail there. But when it comes to inflation, we're at 2.7%, when the Fed wants to see annual inflation rate closer to 2.2%. And that 2.7% is actually a slight uptick from the previous read. And so you have Fed Chair Powell, being concerned with that inflation rate, that not necessarily being under control. And then he said in the past that he has been concerned with President Trump's, tariff policy, immigration policy, and those being inflationary. But so far, have to say, and we've been focused on this the last couple of months, that has not been seen in the data. It's still keeping Powell in this, quote, wait and see pattern. In terms of what the market is banking on right now for today's decision, you kind of hinted at this a moment ago, 97% probability for the wisest minds on Wall Street that the Fed is not going to cut rates, this time in particular. And this is despite, over the past week, and we've covered this, President Trump saying this when he met Powell last week. Take a listen.
No, I didn't think it was tense. No, I thought we had a good meeting. No, there was no tension. There was no tension. I think he's going to do the right thing. Everybody knows what the right thing is. Even people that believed in, the higher rates, they're all on board. They all want to see the interest rates come down.
Yeah, and Trump reiterated that message in Scotland over the last couple of days, saying that he believes the Fed should cut rates this time. Again, 97% probability that's not going to happen. We'll know for sure at 2 o'clock when the decision comes down. But more importantly, Wall Street's going to be listening right around 2:30 to hear what the Fed chair says about the decision for this rate cut or lack thereof, and then potentially about the next rate cut in September. I will bring some slightly good news. 60% probability among most economists that come September, we may see the first rate cut in quite some time, Markie.
Okay, we'll always take a bit of good news, some silver linings where we can get them. Also, Alicia, a flood of economic data is set to drop this week, along with a rapidly approaching tariff deadline on Friday, August 1st. So how does that help the Fed figure out what to do next?
Yeah, here on Wall Street, as finance geeks, they're calling this kind of data palooza, if you will. A lot of data coming out this week that's going to give us kind of the most robust snapshot of where the economy stands right now. And then, as you noted, that tariff deadline on Friday for President Trump's kind of deals with countries around the world, that's going to be a significant moment. All of that going to play into how Fed Chair Powell is looking at the next rate cut beyond the one that we're expecting today, or again, the lack thereof that we're expecting today. So in terms of this data, this morning, we're actually going to get a GDP read. On Thursday, we're going to get a PCE read. And then the Fed's preferred gauge, that's the PCE read. That's going to be something the Fed's going to want to see come down or cool a bit more, again, to get more comfortable, kind of increase the probability that we see a rate cut in September. And then we're going to close out the week with July's jobs report. That's going to be a big one. That's going to drop on Friday. A weakening labor market, kind of as I hinted before, that'll be another indicator or another kind of motivation for the Fed to cut rates. Now, this morning, again, right around 8:30 this morning, we're going to expect a GDP read. I want to focus on that for a second, because if you remember, Markie, last GDP read was a Q1. We saw a contraction, a shrinking of our economy. We're not expecting to see that today, but if we did get that, that is a definition of a technical recession, so something that we're paying close attention to, and certainly the Fed's going to pay close attention to that as well, Markie.
Yeah, we'll see what further clarity we get after Friday. Alicia, thank you so much.
Thank you for watching. Subscribe below and download our NewsNation app right now on your phone, and you will get fact-based, unbiased news for all Americans.